today. So the recording, I've started the recording, and you can request to record it right there too, or you can get the recording later on. So like I was saying, I'm going to first analyze the dollar index, and the reason for analyzing the dollar index is for also have a good understanding of how to approach or trade the EURUSD and GBPUSD. Then we're also going to look at the oil charts, and with that, it will give us an understanding of how to trade the US dollar card and the pounds card. So I was saying that this is my handle on TradingView. You can search for me Forex Grandmaster there. And some time ago, I made a prediction that US oil is going to go down, and this is the chart right there. So when things happen anywhere all over the world, it doesn't just happen. There are reasons why they happen, and if you go to your chart, you'll be able to see the expectations of the market, and some of the reasons why some people will start telling you that maybe there are some news or whatsoever. It may not necessarily be so. Well, it can be so, but the most important thing is that anything that is happening anywhere is actually going to represent it right there on the chart. And if you study your chart, you should have an understanding of what to expect next. So even this was in February. This was in 3rd of February. And I made that analysis right there on US oil. The US oil is going to come as low as, I think I even made a prediction to around the $20 mark. However, I got to about the $10 mark. So it didn't really happen by chance. There are reasons why that happened, and it's right there on the chart. So let's look at what happened after then. I was expecting that price may still go for one more push before it comes down, but invariably just came down from that spot right there. So my target level was expected to be around the $20, but what eventually happened then was that it went as low as even getting to $0. Now, I also gave that prediction that price is going to bounce off from that spot and move forward. So the reason I'm saying all this is for you to know that if you look at your chart and you study the price action very well and the wave analysis, you have an understanding of what to expect in the market. The COVID-19 effect was what made it to push below the trend line that you can see here up to the $0. And the reason for that is because there have been lockdowns all over the world. The planes and everything are not moving, and then you have the total crash. Then I think some time ago too, I made this prediction that from that point onward, that's a week ago, that's okay, 20th of April, that from that point onward, we should be expecting that price is going to move up. And that is what you can see right here. You can see that price has actually moved up to this level. So we are going to start the analysis from this point and see what to expect. Is price going to just keep on moving upward, or are we still expecting some downtrend? We are going to also study them as well. So there are a lot of predictions right here. And I also made a prediction on gold, and gold only came down a little, then bounced up. Yeah, we were in wave B, overall wave B, and also in wave C, giving us the end of wave 5. It only came down a little, then went up. We are going to see what to expect from that setup later on. So let's go to our chart, and from here we'll try to understand what to expect in the dollar index and also in the EURUSD and GBPUSD. So as usual, we are going to start with the weekly chart. It is always good that you start your analysis from the weekly chart. I think I need to mute all. I can hear some background noise somewhere. Just 1 minute. Okay. So for the dollar index, if you understand wave analysis, you'll be able to have an understanding of where price is going to. The advantage of having understanding of wave analysis is to let you make predictions of the market even before they happen. And right here, as you can see, that we have something that looks like an ABC, and then after that, price eventually started doing a 1, 2, 3, 4, and 5. Then it made the correction ABC. So this area seems to be the end of the correction of this move to the downside. And it looks as if after some time we are going to be having another move to the downside, a continuation of the downtrend. So currently, right here, we are, price have made this move down, and then it's making this correction, an ABC correction. That's a three-wave move within the wave two. And after the correction, it's expected that it's going to keep on going down. But I don't know if the correction of this wave C of 2 is actually completed yet. There's still a possibility that price could go up a little and then come down from there. So now that we have an understanding of what to look out for on the weekly time frame, we can go to the daily time frame and also see the wave analysis there. So some time ago, before price was even making this move to the upside, that was when I gave the signal. I think I gave the signal right here. If you can look at this, this was where I gave the signal that price needs to make some move to the upside. Price needs to make some. This was where it was before they made all those moves. That price needs to make a move to the upside in this blue box where the overall wave 2 and C will end, then eventually reject that area. And you'll see that that was about exactly what happened. Price eventually moved into the box area. The box name moved, if it's Friday, moved in the box area, then it's rejecting it. Now, what is not quite sure yet is if we have finished the move to the upside, and we are going to have an understanding of that by the time we do more analysis right now. So price have moved into the box area in this barrel wave 2 and wave C, and we seem to have something that looks like a correction of this move to the downside. So there's a possibility, let me use white so that you can see, of this move to the downside. So we are in a correction phase right here. So there's a possibility that with this move that we have right now, price eventually is going to keep on going down up to this level. And the reason for this is because if you have gone through my lesson, you know that when we have an impulse move, then what you should expect is a correction. Then after the correction, you are supposed to be expecting another impulse move to the downside. So it's looking more likely that the wave C, the overall wave 2 and wave C have been rejected and price is going to keep on going down. So what this means is that we are expecting that dollar is going to be weak over the coming period. Now, it may not be immediately right now. By the time you go to your chart, you try to find out if the move to the downside has started yet, or you are still going to be having some corrections to the right-hand side before they flush down. So if you go through the training, you understand that we can have a three-wave correction and we can have it to be very complex. So if it's a three-wave correction that we have right now, the price is going to keep on going down. However, if it is not going to be that simple, then you can have price to be dancing around this sideways movement for a long time before it eventually then goes down. But one thing is clear, if we have had this impulse and then we have this correction, what we should be looking out for is that the dollar is going to be very weak eventually after some time. So let's go to our charts. We're going to go to our charts and then we are going to try to see what we have on the MT4. Let me quickly share the chart right here. Okay, so this is the dollar index 2 and this is the daily time frame. The daily time frame. So this is the move that you have seen on TradingView. It is always better that we first analyze on TradingView, then come back to our MT4 where we are going to be taking trades to now try to spot the same thing there. So I'm going to switch it now to 4-minute time frame, 4-hour time frame. And as you can see, we are in a correction. We're in a correction right here. And the first thing that happened is the price came down this low and then it started moving sideways. And there's a possibility that after the sideways movements have been completed, it's going to keep on going down. But mind you that we are still in a correction phase. And just like I said before, the correction phase can take a two-way move where you have the A, the B, and the C, then price will keep on coming down. Or it can give you a 5-wave correction where you have the D and the E, then price will keep on coming down. Or we are going to be having a complex correction pattern where this is the first phase, and then you have a two-way move, then another possible flat 1, 2, 3 before price comes down. So no one knows what is going to happen yet, but what is actually important right now for us to know is that we have had an impulse and price is making a correction to the downside, and then possibly we are still going to keep on having a downtrend later on. So now that we have an understanding of what we should be looking out for, we can then go to, okay, now you can see the way to trade this is just to look out for the same concept that I just taught you right now. Price has moved down here, and now on the lower time frame, it seems to be doing like a correction, and from there, you expect it to go down. So if you go to the 1 hour time frame, you should be able to have an understanding of what price is currently doing. So right here, price seems to have made a 1, 2, and then this is a 3, and is in its sideways correction. So if you want to possibly trade this kind of setup right now, all you need to do is to try to look for your entry at the rejection of this zone. If price rejects this zone that you have right here, then it's going to be giving you a confirmation for you to join the trend for the next move to the downside. So with this now, we can have that understanding and then go to EURUSD. I know some of us have questions, and I will just tell you to hold your questions to possibly the end of the webinar. So with this understanding right now, we can go to EURUSD and try to find out what exactly we should be looking out for. So EURUSD. Now for EURUSD, I've given this analysis. I made this analysis some time ago. In fact, as a matter of fact, we started the analysis from somewhere around here in 2017 and took it up to this level. Then after some time, we also took the trade setup around here and took it down. But all the while, EURUSD has actually been ranging in a diagonal structure. And for some period, if you observe that I've not really been giving signals on EURUSD because the signal, the setup is actually not clear. And you understand why right now. Let's always start from the weekly time frame to understand the price action there, then we'll know what to expect. So the price action here is quite very simple. Let me shift it back a little. So as you can see, price made an ABC, which we have a 535. Then after that, we also had an ABC, which we also had a 535. Where price made 1, 2, 3, 4, 5. They made a correction, they 1, 2, 3, 4, 5. So after the overall big impulse is making this correction to this. Hold on. I think my phone just fell off right now. So after the, okay, I think I'm not sharing the right screen. Hold on 1 minute. Okay. Okay. So let me quickly recap what I said. I was on the daily time frame before, and I said that the reason why I've not been trading EURUSD, we have been following my signals in the group. You observe that I've not been giving signals on EURUSD because it's actually making a diagonal correction, and the setup is not that so clear. It needs to give us an understanding of what we want to do. Then that is when we can decide to trade it. So I said we always start from the weekly time frame and try to understand the overall price action there. It will give us an understanding of what we are supposed to be expecting by the time we go to the lower time frame. And right here, price made a 1, 2, 3, 4, 5. They made the correction, then another 1, 2, 3, 4, 5, giving us an ABC correction, 1, 2, 3. Then after that, it made the same ABC 2, making 1, 2, 3, 4, 5. Then the correction, then another 1, 2, 3, 4, 5. So giving us another ABC correction. So what I'm seeing right here is that price made this overall move. Price made the overall move to the upside, and now it's making a correction. And the correction is most likely going to be ending in a WXYXZ formation, where you have W, X, then Y, then X. Then most likely price is still going to come down up to this level. But you know, we first analyzed the dollar index, and from dollar index we could see that there seems to be a possibility of the dollar getting weak. So with that expectation in mind, what we should be expecting to see right here is a possible correction to the upside. Then after that, price then coming down for this V. So if dollar is going to be weak, then we expect that Euro USD is going to be going up. And the reason is because they move in opposite direction of themselves. So with this right now, we can go to the daily time frame and also possibly the 4-hour time frame to have an understanding of what to expect. So price have got into this area, and there's a possibility that it's going to get to somewhere around here, which is this trend line that I drew, then possibly bounce off from there for this V move, and then we are going to be having that flush to the downside. So with that, we can go to our trading platform, the MT4, and we can try to understand the setup that we have there. So this is the 4-hour time frame. Let's first start with the daily time frame so that we see exactly what we analyze on the on trading view. So you can see that price have actually been moving in a downtrend. They made a spike up, and a whole lot of traders will start getting to see the possibility of the up move, and some of them will get caught because this structure is not completed yet. So like I was saying, there's a possibility that price is going to first get down to somewhere around this level, then go up from there. So let's go to our 4-hour chart and then try to understand the price action that we have there. So the price action we have here is quite very simple. And as you can see, what you should be looking out for is this. Now you see that price made this good move to the upside, and that is going to be giving us roughly how many pips to the upside? About 500 pips, roughly 500 pips. Now I made that move to the upside, then after that it started moving sideways. Now the psychology you have here is that there's a possibility that we are going to move to the upside, giving us something very close to this first impulse move. So what we are going to do right now is to try to draw our trend line right here and also draw our trend so that we can see and understand the setup quite well. I think I will want to raise this to the overall here. Yeah. So my understanding of what I can see right now is that there's a possibility that price is going to first break this low, come down to this level, then possibly go up from that. So what I'm going to do now is to try to understand what we have right here. This moves to the downside. So I have an understanding of what we have right here. I'm going to measure the retracement level of this move to the upside by using my Fibonacci level, Fibonacci tool, taking from this low to this high. And as you can see, price actually retraced around the 78.6%. So if you go through the harmonic trading course, you understand that when you have price getting to retrace around the 78.6%, there's a possibility of you having a butterfly pattern. Now, if you know my trading style, you know that I usually combine harmonic patterns, divergence, and market structures and a lot weight together, and possibly also the pivot. I'm going to be plotting our pivot later on. So we have the 78.6 right here, and with the 78.6, what it means is that we should be expecting that price may get to the 127.2, giving us a butterfly pattern. So I'm going to set those two key levels right here. So price will say 78.2, and there's a possibility that it's going to get to this 127.2 before it then bounce up, giving us this kind of formation. X, A, B. Then the C can possibly be around here. Then you have the 127.2 completing around here before it goes up. So what I'm saying here in essence is that there's a possibility that price first go up here, but it may not get to this A level, then giving us this flush downwards, which is where we are going to be looking at for a possibility of a rejection, and we take the trade. So for now, if you want to trade Euro USD, right now is in the middle of the move, and you're not supposed to trade it yet. It is not clear. As you can see, this is a sideways movement, and price is in the middle. Now, when price is in the middle, you have a 50-50 chance of it going to your prediction. It can either go up or it can either come down. So you don't want to take a trade setup that is 50-50. You want to wait for it to actually get to either the resistance level or the support level and look for your entry there. But for me, I'm not going to be trading this move to the upside. This is what you can expect if you want to trade that kind of setup. I'm going to draw this, and then you are going to draw this. So by the time you go to the 15-minute time frame, it will be clearer for you to be able to trade. Now, this is what you are going to draw here and also then draw here. So a rejection around here is going to give you that push to the upside where you can take that buy setup. But like I said before, I'm not looking at the buy. I will be looking at price getting to either, let's go to the 1 hour time frame, 4 hour time frame, sorry. I'll be looking at the possibility of price getting to either the 127.2, where I'll be looking for the completion of the butterfly pattern for me to take that proper buy. So this is the setup I'm looking for actually on the EURUSD. So with that in mind, so let us also go to GBPUSD. GBPUSD. Now for the GBPUSD, let's go back to our chart and so our trading view and try to understand the setup that we have there. GBPUSD. And as usual, we're going to be starting from the weekly time frame. So we need to first understand what has happened and then use that to understand what should happen going forward. So right here, you can see that price made a 1, 2, 3, 4, 5. Then after that, it made a big correction. We actually right now we are in the C. If I take it down, you see that I have my C and wave 5 right here. Now, we don't have the complete price action right here for us to know how long this would have been. Possibly this is wave 5 of the overall move where price may have done 1, 2, 3, 4, 5, then ABC 1, 2, 4 before you eventually got here. Then we are now having this correction right here, the correction of the overall move to the upside. So that in mind, what we want to do right now is to try to understand where we are and then where we may possibly be going to. So with this, you can see that after price have made a wave 1, wave 2, wave 3, and wave 4, we are possibly in wave 5. And the wave 5 is unfolding in also another 5-3-5 formation, ABC. 1, 2, 3, 4, 5, then a correction, which is the B that we are right now, then another possibly 1, 2, 3, 4, 5 later on. So we are in B, and B is showing something that looks like an expanding triangle, and we don't know whether it's going to give us to be complex or not. But what we can see right here is that price has been bouncing off this support line, and it made this move to the upside. Then now is making a correction. If you go to the lower time frame, you see this correction quite well. And what it means is that after the correction, there's a possibility that price is going to break up to this level. Then after that, come down for the overall wave C and wave 5 of higher degree. So with this in mind, what we need to do now is to go to the daily time frame and also understand what we have right there. On the daily time frame, this is what we have. Price made this flush to the downside. I also gave this prediction to before this move to the downside. I gave this that price is going to come down, but it only got to this level and didn't break it before reversing. So I made the first target to be around here. Then if price still breaks it down, we should expect it to go for that wave C, but that didn't happen. So it still went back. So with that, I then readjusted it to let us see that we seem to be having something that looks like an expanding triangle within the wave B before price will then eventually flush down. So let me just play it and you see where price got to. Price just got here, then rebound. So there's a possibility that it's going to get up first before we then come down. The reason for this possibility of the up movement is because for now, we are expecting that the dollar, based on our analysis on the dollar index, we can see that we are actually having the reverse of what is happening in the dollar index. In the dollar index, price have moved down, then it's making a correction and a possible move down. Meanwhile, on the GBPUSD, the price have moved up, is making a correction for the possible move up. So if you understand the concepts, if you are able to understand the dollar index, you can use that to have an understanding of what should happen on the GBPUSD. So we have this, and there's a possibility that price may first come down here, then move to the upside. So what we are going to do right now is to go to our MT4, back to our MT4, and then try to understand the concepts, the setup that we can see right there, and see how to trade it. So we have this right here, and we also have this right here. So what it seems like right now is that we are in something that looks like a descending triangle after this first impulse move. After this first impulse move, 1, 2, 3, 4, 5, giving us the possibility of A, then price is making this correction. Then after that, we may be having another 1, 2, 3, 4, 5 for the C. So with this in mind, what we can do is to, let me just zoom it higher. So what we can do right now is to try to understand how to trade this setup. Let me first off, I'm going to off this so we see better, then we can plug in our pivots later on. So what I'm going to do right now is to try to also do the structure of this small correction right here. Now, what you need to understand is that when price is moving within this kind of structure, there's a possibility that it's going to be breaking below this that line eventually. The reason for this is because the same concept that we have been talking about, the same thing that is happening here. Price has come down here, then after that, it's making a correction. And there's a possibility after that correction, it's going to come down one more time. Then we can then look for our buy setup around here. So there are two ways at which you're going to be trading this. The first way you're going to be trading it is to look for a sell setup around here that is going to take you all the way down to this low, overall low. Then you now look for a buy setup around here that is going to give you the move to the upside, giving you something very close to this move right here. So remember, we have something that is going to be looking like an ABC formation, where this is going to be a descending triangle, A, B, C. No, this is the X, this is the X, then the A, B, C, D, and possibly the E. But at the end of the whole thing, when price rejects here, it's either it gets to this area, rejects it, and then start giving us this kind of correction for us to move more to the upside. So for me, let's go to the 1 hour time frame right now and see what price is currently doing. So as you can see, it's looking more likely that price is going to be going down below this trend line. But this may actually unfold in two ways. And the first way is going to be is that we can have this to be a W, and that this is the X, then price is going to give us another correction, 1, 2, 3 for the Y. So invariably, you may be having something that looks like this. Then after which you can then start looking for your sell entry around this area. You can start looking for your sell entry around this area. It's going to take you down to this low. Then you're also going to be looking for your buy entry around this area that is going to take you up eventually for the overall we see. But right now, I wouldn't advise that you take the sell right now, and I wouldn't advise that you take the buy right now. Wait for price to get to this area. If price gets to this area, then it's going to be giving you a very good spot where you're going to be looking at for yourself that can possibly take you to the downside. So let us go to back to our trading view and study the oil chart. Let's go to the oil chart. The oil chart is going to give us an understanding of how to trade the US dollar CAD. And if you have gone through my training, you understand the reason why we use the oil chart to have an understanding of how to trade the US dollar CAD, and also the Brent oil to trade the pounds CAD. So we are going to start with the weekly time frame as usual. And right here, the E is here. right here, what we need to do is to first have an understanding of what has happened so far. Now, this is what you can see. You can see that it's the same concept. The price have actually made a 1, 2, 3, 4, 5 right here. Then after that, it's making a big correction, a sideways movement, and it's unfolding in 5 waves. There you have the A, the B, the C, the D, and the E. So price just making a correction. Then after the correction, you will expect that the same movement at which it did right here can actually be replicated right here. So I was telling people that right here, this is where I gave the buy setup. I was telling them that this area is actually a good setup, a good area for one to look for a buy. But you are not just going to just buy and not observe what price is doing. You can see that when price got to this area, I gave the arrow and I stopped it at this area. I will have done this, but I have to stop right here. And the reason is because there's a possibility that when price gets here, it's still going to come down to retest that low area before it again goes up. So with that in mind, we can go to the daily chart and have an understanding of the price action there. So this was where I gave the sell setup, and the sell setup would be, I think that will be in February. That was in February 3rd, and that was what eventually led to this overall crash right here. So it didn't just happen by chance. If you are a good analyst and you can study the chart well, you'll be able to understand what the old professional traders out there in the old world are saying. They are actually communicating with themselves and they know what they want to do. All you just need to do is to go to your chart and study it. So right here, price bounced off from the overall low, which is this $0, and got to this area. And you can see I have a line right here. And what that line represents is that there's a possibility that price gets to this area, then come down. Reject that area, they come down. If you go through my training too, you understand the reason why this is a very good area for you to be, for there to be a rejection. This is a very good area for this. This is the wave 4 of the wave C to the downside, the initial wave C to the downside. So when price is going up, it's going to be looking for an area for an area where it's going to be getting a support and for a resistance. Sorry, and this is a possible area for that resistance. After that, there's a possibility that price is going to push down here. Now, there are two things you need to look out for if price wants to go up. There are two things you need to look out for if price wants to go up or if price wants to come down. We don't know yet, but what we have on our chart is going to let us see that. So the first thing right here is that if price wants to go up, if price intends to go up from that spot, then we are going to be having a rejection around this spot and pulling back a little, then possibly rejecting this area to go up, giving us the formation that most of us we usually know, the inverse shoulder edge shoulder pattern. So if you want to be buying the US oil, this is not the good time for you to buy the US oil right now. You want to wait for it to pull back and reject this zone right here. Then that's when you can look for a proper buy. And that can unfold in about 3 weeks. Price doing something like this, giving you this kind of setup. And if you remember, we'll be talking about impulse, then price making a correction, then the next impulse. So you are not going to be buying the US oil right now. You're going to wait for that pullback. Now that's the first scenario. The second scenario is that there's a possibility that the wave 5 is not yet completed and we are still in overall wave 4. Remember that in wave 4, it can actually be a complex, both wave 4 and wave B and wave 2 can actually unfold in complex ways. So what happens here is that if price wants to actually still go downwards, then you can have this movement right here. You can have the price going to be ranging around this spot. If you get to see that price start ranging around this spot instead of breaking above this this line, let me try to see this. Hold on a little. That's about the $30. If it doesn't break above the $30, about the $30. So if you see that price just keep on ranging around there, doesn't break above the $30 mark, then there's a possibility that we are going to be having it even going more to the downside. That means you should be expecting that price is going to go down from there and then completing the overall move before you now start looking for a possible buy. But if you ask me, I think that price is going to get here, then come back to reject this area, then keep on going up. The setup that we have on the weekly time frame suggests that we are finished the correction phase, right here. This correction phase, we have finished the correction phase, and price eventually battle. But you know, currently there's this effect of COVID-19, and we don't really know how far things will go. If things start getting better off with medicine and all that, then you may expect that it should pick up. But if things doesn't get better and there are still increases in confirmation of cases and all that, then you may expect that price will just keep on ranging. What I just say right there is that possibly if there is no better medicine or whatsoever, price will just keep on ranging for a very long time. Retest the low, then bounce off from that spot. So it all depends on how the COVID-19 plays eventually. Let's quickly use this to have an understanding of what to expect. We use this to have an understanding of what to expect on the US dollar card. So for the US dollar card, let's quickly go there. I'm not going to explain why we need to study the US dollar card. And why the correlation between the two. If you do your research, you'll understand better. So this is the weekly time frame US dollar card, and I gave this analysis to some time ago. That would be in 2016. This 2016 chart, and I was saying that price is going to be selling off from this area, and price eventually respected it from that spot. And you can see we had the ABC before price eventually started moving sideways. So let's try to understand the overall setup here. Then we use it to understand what we should expect. So like I said, price moved with 1, 2, 3, 4, 5, then make a correction, and ABC. And in that ABC, we also have a 5. We have a 3-wave correction. Then we have a 5-wave correction. We expect that price is going to start selling up from there. So right here, what we then have is more of a sideways movement. And the reason for this is because the US dollar card is mainly rooted to the oil chart. So that means that if oil is actually going to start increasing, if oil is actually going to start going bullish, then you expect that the US dollar card is going to be doing the opposite. Somebody was raising up his hand or a chat. Let me quickly check. Please can't hear you if you wouldn't mind. Can you guys confirm my audio? Can you guys hear me? I need to know so that I know I'm not just talking to the air. Please kindly confirm if you can hear me there. Okay, if 1 or 2 people can hear me, then most likely that person is just having his own personal technical problem. Okay, so let's continue. The US dollar card is inversely correlated to the oil chart. So when the oil chart shows momentum to go up, then you expect that the US dollar card is going to be going down. And that is why you see that right here, when the oil card was actually coming down, the US dollar card was actually going up. And now that we expect that the US oil is going to go up, we should also expect that the US card is going to start flushing down. So right here we have the ABC, which is the first wave correction, the A, and then price in the wave B. Now wave B is actually known to have either a simple correction or a complex correction. And that's why you have it that it has been in overall WXY. If you go to the lower time frame, you see the breakdown of this wave count right there. Then from there, if you still want to go complex, you can go for WXYXZ, where you have WXY, then come here again, then go for the Z. But I don't see that possibility right now. I feel that if the oil chart starts going up, then you have it that we are going to be having this our quick C. So let's go to the daily time frame and see what we have there. Now this is the daily time frame, and the US dollar CAD is doing exactly the reverse of what we saw on the oil chart. You can see on the oil chart, we have something that looks like impulse, that is price going up. Then we are expecting that it may correct, then go up. And that's what we have right here too. It has come down here, then it's making a correction, and we expect it to come down from that spot. So with this in mind, we can go to our trading platform and try to go to the US dollar CAD on how to trade it. US dollar CAD should be where? Yeah. Okay. So we are going to start with the daily time frame, and on the daily time frame, you will see that we have exactly this. So it's looking more likely that the move to the downside has begun. Price actually made this move to the downside. Then after that, it made this correction. Then you may have it more to the downside. So with this, you can go to the 4-hour time frame, and on the 4-hour time frame, you see that the trade setup here is even very clear. The trade setup here, this is the X, and this is the A, B, C, D, and then the E. So with this right now, what we should be looking out for is the possibility of price still pulling back up a little, where we are going to be looking for our sell. You are not going to be looking for a buy setup right here. The reason you are not going to be looking for a buy setup is because clearly the trend has changed from bullish to bearish. The reason is because after here, price got to this overall high, made this correction, which is our A, then price is in a B wave correction right now, and then you expect it to keep on going down from there. So with this right there, we can go to the 1-hour time frame and see how to trade it. So right here, I'm going to draw this, and I'm also going to do those two things actually. I'm going to draw this this horizontal line, and then this horizontal line, and this one right here. So this is what we have, and price made this move to the downside, and it seems to be that we are going to be having a correction right here. Then we are going to be looking for our sell. So how do you trade it? If price breaks out from this line, from this one, it's going to possibly get to this area. So you don't want to go for this buy because you already saw that the trend is downward, and the move to the downside can happen at any particular point in time. Although we have something that looks like an inverse shoulder, edge shoulder here, pushing it to the upside, but you don't want to go for that up. The reason is because you'll be able to understand the overall structure of the market, that this is an impulse, and we are in a sideways movement for a possible correction to the downside. And the move to the downside have started earlier. So if you are not in the trading, you want to wait for price to possibly get to sell around here, reject this area, then you can look for your sell around that spot. A proper one can be that you plug in your pivot level to see if you have a confluence of that same area. So as you can see right now, the weekly pivot is also somewhere around here. So price can possibly get to the weekly pivot before coming down. Then if I also plug in the monthly pivot, I think we have a confluence of that area. So the overall zone right here is going to be giving you the place where you should be looking out for a possible rejection for you to take your sell. That means that price is not supposed to get beyond this area, this horizontal line that I just drew right here. So I'm not going to be taking the buy, but if you have the trading skills of taking that buy, you can. If you go to the 15-minute time frame, perhaps the structure will be clearer. So on the 15-minute time frame, we seem to have something that looks like an ending diagonal 1, 2, 3, 4, and 5. Then price rejecting that 5 level, and you have your RSI giving you that buy setup. I'm not in the trade right now, so I'm not going to be taking this setup. I will just wait for it to get to this area, then look for a sell that will take me downwards. But if you want to take the trade, if you have the trading skills, this is going to be giving you roughly around 90 pips or thereabout. So with that, let us also go to the last one, which is the which is the Brent oil, that's the UK oil. Then we use that to have an understanding of what to expect in GBPCAD. UK oil. Okay, so we are going to go to the weekly time frame, and then we are going to, so we have almost the same concept that we could see on the US oil. Price made a 1, 2, 3, 4, 5. They made this correction A, B, C, D, E. So with this E right here, we are setting a bounce up from around the spot. But we don't know if the move to the upside is completed yet. What we need to do is to possibly go to the daily time frame and try to see the overall price action there. But from what I can see right here, what I'm going to do is to try to measure the Fibonacci retracement of this, and maybe there's a possibility of we having an harmonic pattern. And I think this level should be about the 50 to 61.8%. So yes, price is actually bounced around the 61.8%. And with that, there's a possibility of we having a crab or a ghastly. So what I'm going to do is to try to expect, if it's going to be ghastly, it will have retraced from there, but it didn't follow the ghastly pattern. So most likely, I'm going to be looking for the 127.2 and 161.8 zone. Okay. So if price is going to, so I'm saying that there's a possibility that we have this harmonic formation, XABC, X, A, B, C, and D. D ended somewhere around here at the 127.2. But we don't know yet. What we are just going to do is to go to our daily charts and try to find out what we may most likely be getting. Okay, so there are two things that have happened right here. The first one is that price made the A, that's after doing the 1, 2, 3, 4, 5. They made this correction, then made another 1, 2, 3, 4, 5. Now, what is not clear, the second one, which is what I want to explain now, what is not clear is that we don't know if this is the end of the wave 5, or we are actually in a complex wave 4, where 5 is going to be giving us an ending diagonal. So I'm going to zoom in more and let's see the price action that we have right there. So if this is going to be end of wave 5 right here, then it means that we are going to be expecting the same thing that we are expecting on the US oil, where price is going to be getting to somewhere around here, then failing to break that spot and rejecting this area, giving us an inverse shoulder pattern for a possible move to the upside. Or if that is not going to be the end of wave 4, then it means that the whole of this area can actually be complex, then price going for the wave 5 eventually before going upwards. So I would say that there is more to the downside on the UK oil for now than to the upside, and possibly price will get to this 127.2, which is about 9.5 area before then rejecting. So if it's going to go up, we will know when it gets here. If it gets here and doesn't get to the low, that means price doing something like this. 1 minute. I mean, price going up first, then doing something like this and rejecting this area. If we reject this area, that's when we should be looking up for the next move to the upside. But if it doesn't reject the area and then come all the way down to retest this low, then there's a possibility that we are going to get to this 127.2 extension before we look for our move to the upside. So all indication right now is that there's still a possibility of price still coming down. So that means if price is going to still come down, then you expect that you are going to be having the inverse by the time we get to the GBPCAD. Let's go to the GBPCAD right here and see the setup that we have. Now, for the GBPCAD, we're going to start with from the weekly time frame as usual, and then we try to understand the price action that we have before we know what to expect. So here, price have made an ABC, then made another ABC, and we are saying possibly another ABC. So the current level where we have right now is the B correction. And the B correction, just like I said before, it can be very complex. You won't know what price is going to do until when it's about to finish. So I expect that price is going to be going up a little. If you go to the lower time frame, you'll see that it has made a move to the upside, going up a little, then coming all the way down. Now, if you, based on our analysis on the UKoil, we expect that price is going to first go up, then it's going to first come down, then start going up. And right here, what we can see that GBPCAD has that tendency of first going up, then coming down. So you are going to be expecting the reverse. In the oil chart, we expect that it's going to come down, then go up. Then on the pound chart, you can see that there's a tendency that it's going to first go up, then keep coming down. So it's going to be the reverse of what we have on the oil chart. Let's go to the daily time frame and see the price action better. So on the price action right here is that we seem to have a smaller ABC within the B complex correction. So right here, we have 1, 2, 3, 4, 5, and then we have this correction to the downside, which is the B, and there's a possibility of us also still having another 1, 2, 3, 4, and 5, taking us to this area where we have the weight C, then from there, flushing downwards. And we can see that we already have an impulse right here, and then price made a correction, and there's a possibility of it breaking out from that zone. So with this, now we can go to our chart and then try to spot the setup there. GBPCAD. Let's start from the daily time frame. And what we saw on the trading view is that price made this move to the upside. Then it is now making this correction. Then after that, we may expect it to go up, then flush down. So the same concept that you have on GBPUSD. If you look at GBPUSD, we have that similar concept that there's a possibility of price first going up, then after that coming down. But the down movement of GBPUSD is not supposed to be major because of what we had seen on the overall analysis on trading view. That this is an impulse, then price is making a correction, then possibly getting to move more for that impulse. But right now we're talking about the GBPCAD, so let's go to the 4-hour time frame, and we have something similar right here, which is giving us more like a descending triangle. So we have the X, and we have the A, the B, the C, the D, and price is currently around the E. So if you want to trade this setup right now, you just need for price to break down a little and reject, then you should be getting to see your entry. So what you need to do is to draw this right here. Then if you go to your 1 hour or 15 minutes time frame, the setup should be clearer. So this is the 15 minutes time frame right here. So if you want to take the sell, which I don't advise that you do actually, is to wait for price to retrace a little to the upside and then take that sell. Right now is not good for you to take that sell right there. So what you can say right here is price made this move to the downside, then making a correction just like you have it on the higher time frame. Then there's possibility of it going for one more move before coming down. How do you know if it's going to go for one? This is the X, and this is the A, the B, the C, and this is the D. If it comes down if it goes up one more time for you for the E and rejects around this area, then you can look for your possible sell. And that's when your RSI can also be giving you a sell signal. So the last that I'm going to be talking about is possibly the gold. Let's see if we can quickly touch the gold. Or I don't know if you can touch the Bitcoin. Let's see. Gold chart. Gold. Okay. So we are going to start from the weekly time frame on gold and then have an understanding of what it has done and what it's planning to do. So right here we have the price did a wave 1, 2, 3, 4, and then the 5. Then it made the correction A, B. Now we don't know if the B is completed yet. The the rule for wave B is that it's not supposed to take out the high of wave 5. So we don't know if it's completed, but we are going to see that by the time we go to the lower time frame. Then we are expecting to get a C later on. So with this in mind, we can go to our 4-hour our daily chart and have an understanding of what to expect. Okay, so right here, I think this area was where I gave a sell signal. Price began to come down. I was expecting the B to have completed around here and then go for the C, but that didn't happen. Price only got to around here, then bounced off, still giving us that the wave B has not completed it yet, and we are still going to be looking for a sell setup later on. Let me just play it and see where we are. Okay, so price got here, then came down a little, didn't get all the way here, then reversed to the upside. So this is where we are right now. So what we can do is to try to understand what you are seeing and then look at how to trade it. So I'm going to draw this trend line to guide us on what to expect. So it makes it quite clearer now that we should be looking for a sell, but the sell is not going to be immediate based on what I can see. The reason for this is because we tend to be having this price move up and then is making a correction. There's a possibility that it has one more up, then flush down from that spot. So you don't want to take a trade yet. The trade setup on gold is not giving us an indication for a sell as of right now. You still want to wait for proper confirmation before taking that sell. So we go to our chart and then try to see the trade setup of gold. Gold should be somewhere around here. BDC. Just hold on. Sometimes okay, yeah, right here. Okay, so even on the daily time frame and the weekly time frame, we seem to be having a divergence already. It seems to be having a divergence. That means price pushing up, but unfortunately the RSI or the oscillator is actually showing that this push to the upside is not really supported by power move, and there's a possibility of price rejecting this area eventually. So if you go to the daily time frame too, you should be able to see the divergence, and this is also the divergence coming up around here. Price is moving up, but the oscillator is showing us a possible rejection anytime soon. So let me plug the monthly pivot and see where we may most likely be having a rejection. I'm going to be using the monthly pivot because I'm on the daily time frame. So right here, we have the R1, we have the resistance, the pivot resistance R1 around here. So if you want to be looking for a sell, you want this setup to break. That means price first coming down all the way to this spot, then rejecting this monthly pivot, making one more push to the upside and rejecting the R1. Then you can then look for your sell around there. So you don't want to take this sell yet because it's most likely going to be ending around here. But if you have a training skill, because the move from this trade to the downside can be about 300 pips, or thereabouts, about 300 pips. But what I would advise is that you let it push up one more time, then look for your entry around here on the lower time frame. So let's go to the 4-hour time frame and see how price can unfold. So you have had this move, and then price is making this correction, this one right here, and also this one right here. So what may most likely happen is very simple. Price may come all the way down here, and if you plug in your harmonic patterns, you may be able to see that there's a possibility of you having an harmonic pattern right here, which is going to look like a shark pattern. This X, A, B, C, then D. So if you have the sharp pattern coming around here at around the pivot level, you want to look for the opportunity to take that trade to the upside. because as you can see, we have the X, A, B, C, D, and E forming right here, and the rejection will take you to that R1. The move to the upside can give you more than the move to the downside, which is going to be about 900 pips or so. So that's how I do my analysis regularly, and I also feel that you guys can also learn from me too, that you know how to spot good entry. Then this is when I want to take questions. Let me look at some of the questions and see okay, I think most of the questions here have to do with the technical problem. So do we have any questions before we end the webinar? It's supposed to just be a 1 hour webinar, and right now we have spent that 1 hour. So I'm stopping it right now. Any question? If you have any question, just raise your hand. Then make sure you are in a very quiet place. Then I can unmute you to talk. Any question? Yes, we are. I plan to do that more. The reason why I've not been doing this all the while is because of chance, so to say. But now things are getting better, especially now that I'm even working from home. So it's making it quite easy for me to do this. But I don't want to be doing this daily. It's going to be possibly weekly. So we may be having this kind of session too on Saturday, possibly on Saturday or Sunday. Yeah, it's being recorded, and I'm going to share the recordings in the group. How do you keep your emotions in check? Well, for you to be able to keep your emotions in check is quite very simple. What I'm going to do right now is to take you to how will I call it? A trading tool that I use to make sure that I don't trade more than possibly 1 or 2% of the account. So what I'm going to do, I don't know what screen you can see. Okay, yeah, you can see this. So what I'm going to do is to just let me use the unlimited one and then say okay. So with this one right now, if I don't want to risk more than, let's say I want to take a trade and I don't want to risk more than 0.5 or 1%, all I just need to do is to just take this one to 1%. And then it calculates the lot size that I'm supposed to use to take that trade. As I'm going to be increasing or reducing my lot size, it's increasing the stop loss, it reduces the lot size. So emotions actually come from you not over risking yourself when trading. If you take too high lot size and your account balance is quite very small, you start panicking, and it's not that you were wrong. It's just that you have not actually done the right thing. You start panicking and you close that setup in loss. So if you want it to be emotion-free, all you just need to do is to make sure that your risk is at barest minimum. I don't want to talk much on risk management because we've come to the end of the session. There's a course that I've done on risk management, and it explains how to work on your emotions while trading. And the most important of all is ensuring that you have not overexposed yourself. Yes, I'll be, please can you keep us up to date as I get to this level? In the group, I'm going to be taking the trade, so I will let you know when I've seen those levels, then tell you guys when to take the trade. Someone is asking if I undergo your training, will one have access to your tools? The tools are different. The training are different. If you want to get trained, you go to the Academy portal, which is club9forexacademy.com, and you register there. But there are considerable discounts for students that have gone through the training, unlike somebody that just coming from nowhere that wants to get the tools. Oh, on V75. Okay. I can do for V75, but the reason why I don't want to do that right now is that majority of the people that have come to join this webinar are not people that trade V75. So that can be on a separate arrangement. Can news change the direction of a trend, or it just only brings about volatility in the market? Yes, news can change the direction of a trend. And the way to then react to it eventually after that is to let it settle, then watch out for the new trade setup that have been formed after the news. You can then trade it eventually. But yes, news can change the effects of technical setups. Yeah, the WhatsApp is full, 257. That's the disadvantage of using WhatsApp group. And I will try to see if I can create a new group for people that still want to be in a discussion group. But most of the trade setup that I post on WhatsApp, I also posted on Telegram that doesn't have any membership restrictions, so to say. The training is $385. If you check the website, let me quickly go to the website right now. If you check the website, this is the website, and these are all the trainings that you can see right there. For the training, it's even going to assess your performance over the period. This is the Forex Academic course. This is the introduction part. The introduction part is quite free. So you can just, the introduction part is quite free. So you can just go through the free videos first. You can register, it's free to register. You can watch the free video first, then later on, you can decide you want to watch the premium videos. So the courses there are the Forex Beginner course, important candlestick formation, chart patterns, Fibonacci applications, Elliott Wave course. The Elliott Wave actually have a whole lot of things in this course, which is what you see that I was using to make projections of where price wants to get to in this webinar. Then you have the market structure, multi-time wave analysis, oscillators, where the RSI and the MACD are being discussed. Then the volume spread analysis, pivot points, harmonic patterns, and harmonic patterns also have a lot of discussions right there. The price action trading course, and then the pro trading course. So the pro trading course takes care and brings everything all together. Then for each of all the courses, you are going to be taking quiz to assess your performance over the period. So for instance, if you want to get to watch the premium videos, it's going to tell you that you can't watch it. All you just need to do is to click on subscribe. Then you see the price, they go to payments, and then you'll be able to have access. Okay, so what other question do we have right here? Can we change the direction of a trend, or you just bring about volatility? Okay, can news change? What's up is full? How do we get in? You mentioned earlier that news can change it. Yes, news can change it. So we get out of a sensitive trade toward the news by the number of time losses and not or not. Okay, from what I can understand in your question, you're asking if you are going to be getting out of the existing trade when news wants to come. Now, this one is quite subjective. It is your call to either go out or not. Because news come and they come in 50-50. Now, what I used to do is that if I'm trading, if I'm taking a trade and I can see that the technical setup goes in line with my expectation of the news, then I'm not going to trade it. The highest I'm going to do is to just move my stop loss of break even. Because if you close a trade, there's a possibility that it moves in your direction after you have closed it. But what usually happens mostly is that traders reach too much of their account, and then most of all the spikes will have even crashed the account before moving in that direction, which is why you want to always make sure that you reach very little when taking trades. It means you have a fixed risk per trade. No, I don't do fixed risk per trade. It depends on the setup. If I take good setup and it's not 50-50, for instance, is the high probability the setup, like having 80 to 90% chance of it going in my direction, I can use 2 or 3% for that setup. But if I'm taking a trade that's having about 60-40 chance, then I can decide to just go for 1% or even less. You mentioned that news can change trends. Can it also change the structure or formation of the wave? Most of the time, it doesn't change the overall structure of the wave or whatsoever, but it can actually change the trend for that period. Then after some time, it starts moving it starts forming a pattern that you can see what next is going to happen. Then you can take a trade after the whole formation is completed. When is the academy going to? The academy is already fully kicked off. You just go to the website, which is club9forexacademy.com, and you can register to become a student for free. Then you can eventually become a premium member. For the copy trade and signal service, I stopped the signal service last month because the trade experience in February and March was not that so good based on this COVID-19 effects on the price chart. So I was just doing my own personal trading, but very soon, I think next week or about 2 weeks or there, but I should be giving the signal service again. But for copy trade, the reason why I don't want to compound it with copy trade is because of my own personal availability. I have a whole lot of things that I handle at the time, and for copy trade, one needs to actually be ready to start the copy trade, otherwise things might get messy. So I will just tell you to exercise a little patience for the time being for the copy trade. When can one enroll in a trainer? Are you the one to click up the training with your students? I do live training before, but then from my understanding, a whole lot of people that enroll for the training, they usually don't even have time to come at the live training. They just tell me to send the recording. So then I feel like if you are interested in recording, so why don't I just sit and do all the trainings in a video, and then people can go there to watch. So it's no more live training. You go there to watch. If you have questions, I'm always available on, online on WhatsApp or Telegram or any of my social media handles. You can connect me and ask your question. Any other questions so that we can end the training session? If you want the recordings, I've already done the recordings. I'm going to share it with you guys in the group. So if you want to check the recordings, I'm going to post them in the group eventually. Any other question? Okay, I guess there's no other question right now, so I should be closing it off. So by next weekend, by this coming weekend, we are going to see what price have done, and then we'll be able to see what next to do. But as the signals unfold, as the trade setup gets completed, I'm going to be posting the setup to you guys so that you can also take the trade. Yes, I'll return to the Telegram very soon. So you guys stay good and stay blessed. Cheers and happy trading to you.